Welcome to another edition of Zach's Rank Buy. I am Brian Bolin. I'm the aggressive growth stock strategist here at Zach's. I got two more stocks for your aggressive growth radar screen. Let's get right to it. First one is Clear Secure, and the ticker is YOU. It's a Zach's Rank number one. That's a strong buy. And like all my aggressive growth videos, it's got an A for growth, and I like to see a weak value score. So it's got an F for value. So A for growth, F for value, that means right away I'm on the right path. So Clear Secure, this is one of these protect your information, the security of your information, your government regulators, those sorts of things, platforms that connect your cards and your wallet to all those things. It's a great thing. Security, safety, security. So this is going to get lumped into internet software, which is kind of the theme for today. All right, let's take a look at the numbers we love to. Are you beating the number? We've got 3 beats and 1 miss over the last 4 quarters. But as you can see, the beats are way bigger than the misses. And we can see an upward positive trend in absolute terms, except for the miss, in terms of actual earnings per share. So we like to see that. Are the estimates moving in the right direction? And Zach's Rank number one. So the answer is yes. So from 29 cents to 30 cents for this quarter, 32 to 33 next quarter, $1.28 to $1.36 for this year, and then $1.52 to $1.56 next year. So all up. All right, let's take a look at the growth. And we're going to see 14% top line growth this year, $883 million. That's going to round up to almost $1 billion next year for just about 11% growth. I really like to see this. The 11%, I would like to see the 2026 number be bigger than the 2025 number, but I'll take what I can get. It's still looking good. All right, what's our valuation? I think the valuation is pretty attractive here at less than 20 times earnings. So at 19 times, and we're seeing 20% top line growth in the most recent quarter. Price to book is 15 times. That's a lot because this is a asset slim business. Book value is pretty low at $1.73 a share. I could see it right there. All right, price to sales is 4.5 times. I think that's got room to grow to about 7 times. So I think we got a lot of room there. Good looking valuation. And most importantly, margins. How are we doing? We've improved from 16% to 17% and then 30% rounding for the most recent quarter. We see revenue growth, margin expansion that's going to lead to a much higher stock price. All right, so what does the chart tell us? All right, I think this was COVID and just come out at a bad time, and then Tech Rec of 22 didn't really hurt it. Hanging out in the election pop up, we had our miss, and that caused the stock to trace back in from 35. We just recently beat. We're at 26. I wouldn't be a bit surprised if the stock trades over 30 in the coming weeks or months. All right, that is that last pick. That was Clear Secure. Now we're going to go on to our next one. It's Ubiquiti. It's UI is the ticker. It's a Zach's Rank number one. That's a strong buy. A for growth, F for value. This is a bigger play here. It's a $19 billion market cap. Also pays a dividend. A lot of growth stocks, we don't like it to see paying a dividend because we want that money that the company earns to be reinvested in the company. So Ubiquiti is this networking provider stock. So it's networking products, right? So we see that there. It used to be Ubiquiti a long time ago. It was in Home Run Investor. We did very well on this stock. Bought it. We sold it. But boy, oh boy, I wish I would have held on to it. We look at this that year. Look at what it's done over the last year from $150 going up to $450. It's a mover and a shaker. All right. So why is this stock moving the way that it is? Let's take a look at our numbers. We have a miss 4 quarters ago, but we've been beating ever since. And absolute basis here, we're seeing all of these numbers get larger. So there was more earnings per share. We'd like to see that. All right. So what do the estimates say? The estimates are going up from $1.67 to $1.86, and then $1.79 to $1.94, $7.30 this year, fiscal year, to $8.22. $8.19 to $9.11. Those estimates are moving higher, and that's what you want to see. How are the sales? That's the question that a lot of people have. Where you're growing at 23%, next year really slow down to only 9.5%. So maybe a little bit concerned, but we are a long way away from next year, from fiscal 2026. All right. How does it look on a valuation basis? All right, 38 times is a lot to pay for a stock, but not when it's growing at a 29% clip. They can keep that up. That's great. 66 times book is awfully expensive, but again, asset slim, because we're only at $4.80 on our price to assets, but 9 times sales. I could see that ranging anywhere between 7 and 12. Our margin growth is moving a little bit slower these days for this company, but in the right direction, 18 to 19 to 20%. So it's looking good. Let's take a look at the chart. Ubiquiti. This chart is all over the place. All right, this pandemic, but we're coming back. We're not going to die. And tech wreck didn't really get crushed in the tech wreck, but 23 really hurt it. And then the election, and things really took off here. Recent pullback, the DeepSeek, all the craziness in the market softening up. So giving back some of these ultra gains from 150 to 450, that's a big move. So big adjustment here. This where our earnings were really taken down here. So this stock was really a buy at about $100. All right, but it looks okay. I think it's okay. Does it get back to those highs? Maybe not immediately, but margin growth continues, top line growth continues, then things should be good. All right, so that is Ubiquiti. UI is the ticker. All right, be sure to join me next week when I look at 2 more stocks for your aggressive growth radar screen. But until then, why don't you go to Zacks.com/promo to check out all of our latest promotions.